Hello, this is Dale. In this video, I want to discuss my latest strategy. I've been trading for greater than 4 decades, and I've been trying to maximize the profit of the individual retail investor. I've been trading credit spreads for a long period of time. I think they're the most conservative, easiest way for retail investors to make money in the stock market. Lately, I've been focusing on the 2-day till expiration credit spreads, taking advantage of the overnight theta decay to have a profitable trade. What I want to show you in this video is, and I focus on the SPX. The SPX is the Standard & Poor 500. It's got great liquidity. It has good credit. You don't have to worry about earnings, things like that. So I follow the SPX weeklies, but I set it up on one day, and then the next day is where I want to have it expiring. I want to show you a bull put I put on July 25th, and then go over a rack up of the month of July 2024. The 2-day till expiration credit spread has an edge. You always want to trade the market when you have an edge. You don't want to force a trade into the market. The reason why I love the credit spreads is it yields monthly income on a consistent basis. We're more than halfway through the year, and I have not had a losing month with the alerts that I send out to my members. I place the trades when it's overbought or oversold, and this gives us about an 85 to 95% edge. I also use a delta 0.1 for the short strike prices. In layman's terms, this means about 90% of the short strike options will expire out of the money. And this is a great edge too. In credit spread, what we're doing is we're sellers of premium. So we're getting the advantage of the overnight theta decay. This chart quickly shows that the last 2 days of the life of a credit spread, the premium just rapidly decays, especially overnight, right in here. And that's what we're taking advantage of. That's what we're taking advantage of. This latest trade, bull put on the SPX, we set this up on July 25th, where I sold a bull put right down here. We sold the 26 July 53.65 put, and then we always buy one about 10 points apart for protection, and that was the 26 July 53.55 put. For that, we got a net credit of 90 cents. The reason why I got into that one is because it looked like the trend was going up. It was a little bit over sold, and it was moving up. We got in there and it moved in our direction, but then it started to come against us. And it came against us right around here, but there are some indicators that I use, and I wasn't too afraid of that drop because I thought we would get some support. Indeed, we did, and off it went. And by the next day, right around noontime, I think, I went ahead and bought that credit spread back for a nickel. And the reason I do that rather than letting it go all the way to expiration is if by noontime, if you got the lion's share of the money, why not just get out and take that and reduce your total risk, take the profit and move on. For this trade, we had a net credit of 90 cents. We bought it back for a nickel, 85 cents profit. That is $85 for one contract. And this is very close to 100% of the total profit we could get. Now, $85 for one contract, that's $425 for 5, $850 for 10. Some of my members go a lot higher than that, but I just wanted to show you the potential here. Of course, past performance is no guarantee of future results, but these are actual results. And, I wanted to show you the actual results. Last month, I showed you a losing trade because I'm going to have losers. And one of the things you've got to do with credit spreads is make sure that you've got a high probability of success, but you know how to manage the trade so that when you have a loser, it doesn't destroy what you've gained. This is a rack up of what July was like and what we've done year to date. These are documented results. In July, we had 6 wins for $2,775 and 2 losses for $2,525. So we had a net gain of $250 based on 5 contracts per trade. This was the worst month I've had in 2024. July was the worst month. A lot of things were happening. We had a big dip in the market. A lot of uncertainty about what the FOMC was going to do on interest rates, inflation, so forth. Wasn't that great of a month, but we came out positive. And this is on 5 contracts for credit spread. If you have one contract, it's going to cost you $1,000 margin. So 5 contracts is going to be $5,000 margin. This is a strategy that you can get in with a low investment and allow this to grow. Year to date, we've had 38 wins for $18,855, 6 losses for $8,750, and year to date we're up $10,155 based on 5 contracts per trade. Let me go back to July, the worst month. This well exceeds what I charge per month for my members. So I think this is one of the best websites, the best services available for the retail investor. It's good for not only the new investor, but the experienced investor, the small portfolio, as well as the large portfolio. Once again, past performance is no guarantee of future results. What I'd like you to do now is join me. I release 1 to 2 2-day to expiration credit spread trades per week, and I've got the greater than 85% win rate, and this is for the last 3 years. If you go to www.optionsinfinity.com, you'll see 2 offerings there. One is the 2-day to expiration workshop, which I've put together 13 modules. It's over 3 hours of training, exactly what I do and how I manage the trades. If you want to go further and you want to become a member, that's great. What I do is I send out alerts, both texts and emails, whenever I'm going to make a trade. And then once a month, I do a recorded webinar talking about exactly why I got in those trades, exactly what I saw, and why I exited. What I'd like to do is I'm gonna put these videos out on a regular basis. I'd like to do them monthly. I'd like to show you the power of this strategy, and just show you some of the trades and show you the rack ups for the different months to allow you to really feel comfortable with this strategy of the 2-day to expiration credit spread. I hope you join me. I hope you enjoyed this video. Bye-bye now.